Welcome back, and in our top business story, Etihad Airways on Wednesday outlined a range of major changes to its Australian operations, including new aircrafts, new routes, additional flights and new airport facilities. Speaking in Sydney at the CAPA Australian Pacific Aviation Summit, James Hogan, the president and CEO of Etihad, said that Australia was a key and long-term market for the airline, adding that they plan to launch their Airbus A380 aircraft to Sydney and Melbourne, as well as build premium lounges at Sydney and Melbourne airports from 2014. Additional flights will be added to Melbourne and Brisbane, while non-stop flights between Perth and Abu Dhabi will also be launched. Hogan also reaffirmed that Etihad Airways was already moving to increase its equity in Virgin Australia, following a recent approval by the Foreign Investment Review Board to increase from a 10% shareholding to 19.9%. The Etihad Airways Equity Alliance, an alternative to legacy airline alliances, now has 5 members, following a deal last week to invest in Serbia's national airline. Etihad Airways also is awaiting regulatory approval for investment into a 6th airline, India's Jet Airways, which gives the Equity Alliance a combined total of more than 420 destinations, 500 aircrafts, and more than 96 million passengers every year. Hotels in the UAE are expecting a significant boost as the country plays host to thousands of visitors from the GCC and other parts of the globe during the Eid alFitr holiday. Many hotels have already seen an increase in room bookings ahead of the holidays, and they are looking forward to accommodate more guests during the Eid weekend as the peak season returns. Hoteliers in Dubai say they are looking to fill between 80 and 100% of their rooms starting from today, as holidaymakers from the neighbouring GCC countries, as well as other markets like Central Europe, Australia and Asia, are expected to celebrate the end of Ramadan in the country. According to analysts, the majority of tourists visiting the UAE this weekend are expected to be from the GCC countries such as Saudi Arabia, Qatar and Oman, with many staying in the country between 6 and 7 days afterwards. Telecom operator Du has reversed plans to raise the price of its basic internet and call package after a social media storm. Customers will still be automatically upgraded to the more expensive but improved 8 megabytes per second service from September the 1st. But have 3 months to unsubscribe and return to their previous plan. The U-turn comes after angry customers took to Twitter to criticise the company for its plans to automatically upgrade customers on the most basic package, which costs 199 dirhams per month, to one costing 275 dirhams per month. The company said the extra cost was justified by improvements such as free national landline calls, free international minutes, and on-demand movie service. But many customers said they were being forced to pay more for services they neither needed nor wanted, and there was no option to stay on their old plan or even to switch to Etisalat because the 2 internet providers monopolise the areas they serve. In a statement to a local daily, the telecoms company said that it has always been our brand value to offer customers the freedom of choice. Prices in Abu Dhabi rose by 0.9% in the first half of the year, compared with the same period last year. That's according to a report from the Statistics Centre Abu Dhabi. For the first time, the centre focused on calculating inflation based on household incomes and types of households. The population was divided into 3 types of households: Emiratis, expatriates and shared, in which the residents do not share food. The rise reflected a 0.8% increase for Emirati households, 0.9% for expats, and 1.4% for shared households. Prices increased by 0.9% in June this year compared with the same month last year, reflecting a 1% increase for Emirati households and 0.8% for the others. In terms of household income, the report revealed a 0.9% increase in prices in the first half of the year, compared with the same period in 2012. This reflected a 1.2% increase in the lower income group and 0.9% and 0.8% increases in the high and middle income groups, respectively. Prices increased by 0.7% for low-income households in June compared with a year earlier, and by 0.9% for households in the middle, upper middle and high income groups.